Naren, give us a couple of themes. When in your introductory remarks, you mentioned about banks. That could be a sector that at least is reasonably valued. The large private sector banks, which haven't really run away in the last few years. Would that be a sector that you'll be reasonably optimistic on? On the broader markets, you're sounding a little bit cautious, with good reason. But would banks be a theme that you would look to play?
Certainly, because what has happened is that FIs in their index had a very low weightage to banks, because one of the big component of the bank was not even in the benchmark in a big way. That got addressed partially in August, it will get partially addressed in November. So once the November change in weightage happens, in their benchmark, the weightage of banks have gone up substantially. One of the biggest problems was somewhere in the last 4-5 years back, instead of buying Indian consumer stocks, I think the foreign institutional investors bought banks. And they got very over-invested in banks. By the time the November change in benchmark happens, they would be no longer over-invested in banks. So the reason why banks didn't do well was not because of fundamental reasons, but because FIs kept selling banks. So I think that issue should be over by November. And after that, we don't have this worry that FIs are very over-invested banks. So I think that makes it much easier at this point of time. You have valuation comfort. You no longer have over-ownership of FIs. You don't have over-ownership of locals. So, and you have good fundamentals, reasonable governance. So I think that's a sector to look at this point of time.
All right, Nilesh, you come in now, in terms of sectors and themes that you think will look up from here on, give and take everything, valuations, earnings, ownership. What are the couple of sectors?
So one, quality over momentum. Now your definition of quality and my definition of quality can differ, but by and large what you consider quality. Second, high floating stock, market discovered prices over concentrated holding. ये भाई का stock, वो भाई का stock, वो भाई के पास ही रहने दो. तीसरा, reasonable valuation over expensive valuation. If you see by and large banks, IT, pharma, telecom, auto, cement, these are the sectors where you will see some stocks which are reasonably valued. Capital goods, defense, railway, consumer durable, these are the sectors where you will generally find stocks are a little bit aggressively valued. And then there is one market where you don't go because you don't understand the micro caps, the mini caps, the SME index. I believe in that market, some stocks have fallen, almost 40-50 stocks have fallen quite sharply. But despite that correction, I still think it's risky to venture over there. So focus on quality over momentum, high floating stock over low floating stock, and reasonable valuation over expensive valuation.
Nilesh, I wanted your view on this consumption theme that, the commentary that's come in HUL, Nestle, Tata Consumer, all of them are sounding very, very cautious. And the numbers that came in from the two-wheeler majors, Bajaj Auto as well as TVS Motor, both of them disappointed. How concerning is that?
So one, as we speak, festival season is picked up. And in this 40 days between Dussehra to Diwali to Christmas, almost 40% of two-wheeler sales happen. What we have heard on the street, volumes have picked up, but so has the discount. If you want to buy a car or a two-wheeler, today is the best time to buy because you will get all the good terms. Undoubtedly, there has been some slowdown in economy. Cement sales, auto sales, petrol, diesel sales. These numbers have come subdued and soft. Is it because there was Shraddh period? Is it because there was rains? Is it because government didn't spend during election cycle? Or is there something else?
Yeah.
We'll have to really observe this festival season. If consumption bounces back in this festival season, then chances are that the momentum will be carried forward as monsoon has been good. Kharif crop and Rabi crop both should be bumper this year. So you have to be careful, you have to observe data. But in the consumption side, please remember that the consumption is now coming at the Gen Z and millennial level. Many of these established companies are banking upon their brand to get the customer. But the new customers might be moving to some other brand.
There's a disaggregation also happening.
I mean, if you go to a retail store, It's no longer necessary to buy a global MNC company's Cadbury or chocolate. You can get as good quality chocolate at half the price from a local manufacturer. People are becoming value conscious. As Maruti Suzuki advertisement said, कितना देती है? वो अगर आप नहीं देंगे तो कंज्यूमर आपके पास नहीं आएगा.
Naren, on the slowdown bit, you're not so sure, right? That there's a
See, first was there are festivals which got postponed. Then you have to look at the fact that this year we had a much better monsoon. So August, September was certainly affected by monsoon. So when you have a very good rains, the activity level in August, September gets affected. So I'm not very sure whether the slowdown bit. I actually think, I really worry that this big equity boom, people are investing more in equities rather than spending in anything else.
we were just having that conversation with Ramdevji and Navneet earlier, and they were saying exactly the same thing, saying that SIP will not stop. Even if you stop reduce consumption somewhere else.
And भाई मुझे तो आपकी जेब में जो पैसा पड़ा है, आपके घर पे जो पैसा पड़ा है, वो म्यूचुअल फंड में लाना है.
But you think
4 lakh crore, how can it be a big amount? Currency in circulation is double that of. And last time आपने कभी पैसे को छुआ था? You are working on your credit card or mobile phone.
But there's a lot more to come. Yeah, please.
But you look at any IPO today, there's an IPO which closed yesterday.
$30 billion.
I think look at the amount of money. So you're saying money is not there, but look at the amount of money that came into that IPO. So I feel, somewhere what has happened, it is delayed monsoon, some of the festivals getting delayed, and too much enthusiasm for stock market is also delaying expenditure. People are saying, let me keep
Delayed
my money.
gratification.
Delayed gratification.
I can give one example. Nigel, am I allowed? And this is on national television. It's already happened. Our good friend and co-host here, we were having a discussion on diamonds. And Nigel has said that I will never buy diamonds. I would rather put that money in SIPs. So,
Nilesh bhai, I'm practicing whatever we talk.
Absolutely.
I don't put 12
The diamond curve is like this, market curve is like this. So,
but talking about that, what about asset allocation? Gold has done very well. In the last 1 year, everyone's talking about the equity market being up 25%. Gold is up as much, I think 22%.
silver has outperformed Bitcoin
Indeed,
last year.
Indeed. So I wouldn't touch diamonds, but allocation to gold, whether it's the sovereign bonds or some other form of gold. But what would your asset allocation be at this juncture?
So each one to his course or her
What would you
course.
recommend?
I'll say in duration, try to, in fixed income, go longer duration. And maybe next month or so when US yields are rising, you'll get a good opportunity to invest. On gold and silver, we still believe it's time to be overweight despite this run-up. Of course, there will be ups and downs in gold and silver, but eventually, if central banks of the world are becoming like Indian housewife, buying gold and never selling, gold prices has no option but to go up. In silver, supply is getting restricted and demand is very strong.
Yeah.
So those prices also remain supported. And on equity also, maintain your neutral allocation to equity. It's not a market to be leveraged or over-invested, but at the same time, don't become underweight because they have corrected in last few days. It's time to maintain asset allocation as per your risk profile and be honest to yourself. If you bought during COVID time, that means you are a risk taker. If you sold during COVID time, then you're a conservative guy. And if you didn't do anything and just let your SIP continue, then you are average risk taker. Don't be dishonest with you.
Naren is a big believer in asset allocation, and you've been saying, right, you've been saying flexible funds which allow you to kind of move freely between various asset classes. That's the way to go still?
Yeah. But today, the challenges at this point of time, which are the places where there's fear? Globally, there's fear in office assets. So that's why we like if somebody, because anything to do with offices have gone down substantially globally because of this work from home. So that's one area of fear. But otherwise, across asset classes, there isn't fear. Your 10-year yield in India is possibly much lower than gold, silver have gone up. Everything has, residential real estate has gone up. So one of the challenges at this point of time, there are no pockets of deep value at this point of time within India. I mean, if you find a way to invest in some other countries like Brazil, market hasn't gone up for 10 years. So they must be having their problems. But I'm just saying that at this point of time, there are not too many asset classes with fear at this point of time.